Right, Mr. Yates. Cheers.
Cheers.
We won't tell anyone what time it is. Right, thanks for coming in, man.
Thanks for having me, man.
No, it was an easy choice. I like your book.
Yeah?
Want to get into it.
Sweet.
Want to talk about the seventh property.
Yep.
But let's do some background stuff. Like, take me on the journey to writing a book.
Okay.
What took you there?
Okay, so now you want to start like background, like, because it's kind of a long story.
Let's go. We've got
right,
time. We got a drink.
All right, so I'll start this. Let's start this in freshman year of college.
How old are you now?
28.
You're a fucking baby. Jesus.
Yeah, I'm kind of at that age though, where like everybody's starting to get a little bit older now, though. Like 27, 28, all my friends are starting to get married, so I got to grow up. I'm kind of the immature one.
You wait till you hit 43 and everything stops working.
Yeah.
Bullshit.
So yeah, freshman year of college, I was. So I went to school. I was studying finance and economics, and back then I was like I was very structured, and I was thinking like, I was like, career path. I want to work in, private equity, and I had this goal that I set up, and I was, set up this plan, very structured to get to that point. And all the while I graduated college, I went to work for a management consulting firm.
What did you major in?
Finance and economics.
Okay.
And that was just like, I was a younger kid, and I took like personality tests, and I was like, okay, I want to go into this field. And I was always interested in economics. So that was kind of like a hobby of mine. The first book I feel like I read was Capitalism and Freedom by Milton Friedman. That was like my senior year of high school. That got me pretty hooked on the libertarian ideology. And, I don't like to put myself into like groups necessarily. Like there's problems with libertarianism, and it's not like a fully worked out theory, but there's a lot of stuff I gravitate towards. Yeah.
We can get into that.
Yeah,
we had Stefan Rivera in here yesterday. Not Stefan Rivera. What a fucking idiot. We had Vijay Boya party in yesterday. It was because we were discussing Stefan Rivera. But we got into libertarianism yesterday.
Yep.
So we can cover that. I'd be interested to talk to you about
Okay, cool. Yeah, we'll get back to that. So I always saw economics as kind of like a hobby, and finance was like a good tool to be able to operate in the business world. And, when I started going down that journey, I graduated college, and I was like, okay, I need to get the best job I can so that I can get the skills I need to work for like a private equity firm. And I was working for this company, FTI Consulting. So we did corporate restructuring, which is like, so when companies are going through challenges, or they're going to go into bankruptcy, or, somewhere in between, we were advisors that would get brought in to help either assist them or bring them through a bankruptcy. And that's like you take control of the company and you like turn around the operations, or you negotiate with their creditors for them, and a bunch of different things to just kind of help them with like whatever shit show they're going through. And I thought that was a good way for like me to cut my teeth and get into the financial field, see where shit gets really bad. And what was interesting that, I didn't really think about, but in hindsight, that gave me a lot of exposure to all of this malinvestment that exists within the economy. And after a while, I was just, after a few years, I was amazed at how many companies can actually still keep staying alive for the periods they do just by like rolling over their debt. And a lot of these companies should probably just close up shop, and there's not a lot of value being created. So yeah, I was learning a lot about that. And when I moved to this private equity fund, I was dealing with similar type of company. So like there's this private equity fund out here, actually, it's called Platinum Equity. And they specialize in buying corporate carve-outs, which is just like when a larger enterprise wants to remove a division of it, you need a buyer who specializes in doing that, because it can get really nasty. Because when you take like a piece of the pie away, it doesn't have a back office with it, the accounting gets really nasty. You need people who specialize in doing that. And that's what this guy's name's Thomas Gores, and he owns the Detroit Pistons, and he kind of created that idea. So my bosses were his lieutenants, and they spun off and did a fund out in Denver. And I was working there for about a year and a half. And, after being there, it was kind of like, I love the experience I was getting, and it gave me a lot of valuable skills, but it was, I wasn't as passionate about this stuff as I thought I would be. And it was kind of like, you're like a kid and you're trying to come up with like a plan for what you're going to do. And you think like, okay, well, these things seem really interesting. And then you kind of get there. And I was a bit like, disillusion's probably not the right word, but I was like, okay, this ain't it. What is it?
Bored?
Yeah, not even bored, man. It's just like, it's like, okay, so I was like grinding on projects for like 6 months, and you're working like 80-hour weeks and like,
Unfulfilled.
yeah, a little bit maybe. I'm like gaining weight, not socializing, losing friends because I just don't see people as much anymore. And I'm like working on stuff, and it's kind of like if you're gonna work that hard on something, you really got to care about it. And after a while, I was kind of like, okay, so like, is this it? And like, my future kind of started to get definable features. So I was like, okay, 5 more years, I get to this position, 8 more years. And, maybe at that point I'll be 40 pounds heavier and, I don't know, I'll probably have a nice car, but I'll probably be divorced, like things like that.
You've
like,
literally just described my life. Motherfucker.
Oh man, I kind of just roasted you, didn't
just
I?
literally roasted me. Divorced.
Well, I'm talking about
pounds.
Specifically for career related things. But
oh shit! Yeah, you're right. No, that's what happened.
Okay.
It becomes unfulfilling. You realize like 10 years goes by, 15 years goes by, and you're like, what the fuck have I actually done here? Like,
Right.
What did I do? What did I get out of this?
Mm-hmm.
Was I happy? It's they're all fair points.
Right. Yeah, and like I started to kind of see that a bit, and I was like, all right, well, do I want to do that? And at this time, I was almost 26, and I was like, okay, well, if I'm going to take a jump, like now's a good time, and because I could still go back to my career path, I could still recover. I'm still young to like take that kind of risk. You can't really do this as easily in your 30s unless it's like much more structured and less risky. So that was when I started to get the gears turned on, and then I was like, okay, well, what do I want to do? And it was a weird process. It kind of just like hit me all of a sudden. But I was like, okay, well, I was spending a lot of my free time just reading about Bitcoin, and all going back to like the start of my Bitcoin journey. That was in 2017 when I was working for my first company, and I had this buddy who's my cube man named Avi, and he would just like bring up Bitcoin all the time, and he was like more like tech focused, kind of nerdier guy, and I was just like, with a finance background, like, oh, it's a speculative investment. I can't really get behind that. I don't know how to measure its value. That's not going to game. It might be worth a lot one day. I just don't know.
Okay.
And he just kind of kept harping it on me, and then I was like, all right, like I'll read into this thing one day, like just because I love you, buddy. And I started reading into it, and then once the freedom aspects of it started to hit with me, that's when I was like, oh, this is a solution to a lot of the issues of central banking. And once that hit me, I got a lot more interested. And I started to reach, I started off, you research Bitcoin, and then you immediately are like, okay, well, what does Ethereum do? And what do all the other ones do? And I spent probably a lot of 2017 just like looking into that kind of stuff. And you get a lot more confused because you start getting hung up on all these different distinctions between like, the different consensus algorithms and like learning about all this. And you kind of realize there's like this huge spider web of knowledge out there that like people are just getting led into in different directions. And there wasn't like a ton of like really core information that people should be focused on because there isn't like a curriculum that exists for this industry yet. So I don't know if I'd call it all wasted time, but probably a lot less like productive forms of research back then. And I remember back then too, like at one point I was kind of thinking like, what if I jumped into this industry? And I was like, that's a crazy thing. But there's like all these crazy people on Twitter yelling at each other. And but it was interesting to me. And then when I was, fast forward 2 more years, one of the private equity firm again, I'm kind of thinking like, what do I want to do? And I was like, you could think about doing something in Bitcoin. And like there was the Bitcoin side of things. There was the general like career side of things. Like when you're working in private equity, like I was like an analyst. So like I ran numbers, we had meetings, we negotiated, we did due diligence where we found out all the details we could about companies. And it's good work in terms of like, being an analytical person, but there's no like media aspect to it. And when I'd be on Bitcoin Twitter and there's all these people like saying their opinions with followings and talking about what they think is wrong in the world, what's right in the world, that was always something that was really appealing to me. Mm-hmm. And I just thought like being in these professional environments nonstop is just so cringe. Like I just like couldn't deal with that all the time. And I was like, can't we just like kick it for a little bit sometimes, guys?
Did you have to wear a suit?
Ooh, we didn't have to wear suits, which was nice. The only people who wear suits nowadays are like lawyers.
And had you dismissed all the other altcoins at this point?
No. It took me a while to like dismiss them. It was It was more like, and I'm still not at a point where I think like there is a 100% failure rate. I wouldn't qualify myself as like a pure Bitcoin. I don't know what any of these names mean really, but like I wouldn't qualify myself as like a pure Bitcoin maximalist. I'm totally focused on Bitcoin. I think that from risk to reward to value that's expected, everything else pales in comparison. But I think that the idea that all of this will fail and there will be 100% one form of money at like the far extreme is debatable at this point, and I'm not certain of that.
Yeah,
but
I think I agree.
Yeah.
I don't care about any of the other.
Right.
I don't care about
Yeah.
Ethernet. I don't care about Solana. I care about Bitcoin.
Exactly.
That's my focus.
Exactly. Like it's just like when you think about the market size that we're competing for, what we're competing for, and and the market size of everything else that's competing, and when you get that core understanding of how this industry is ultimately going to build out, and you say like, okay, well, it needs to settle on the firmest foundation. We're talking about a massive, massive question here. We're talking about the foundation for an entire new financial structure in money, which is the largest market in the world. So we're going to do that right. We're going to do that on firm ground, and the market's going to gravitate towards that one way or another. And when you think about it from that perspective, it's like, okay, well, a lot of this bullshit floating around is just, it's a bit more laughable. And I think that, why would you focus on anything else? But is there potential for things that ultimately settle in Bitcoin? And will that be centralized companies? Will that be, decentralized in name only companies? Will that be some sort of other layer that's decentralized? That's what Lightning is it's, it's another layer. It's kind of a second form of money. I mean, it's so closely tied to Bitcoin that you can argue it's basically the same thing, but the risk and trust nature of it's different. So I qualify it differently.
Yeah, that's fair.
Yeah. So it's like there are other forms of money that are already being created to like enable this ecosystem.
Well, I think there will always be people trying to compete with Bitcoin because they don't like some of the tech. They think they can do more with other platforms, or the incentive model exists to create something else because of the reward mechanism.
Yeah.
But I think on a long enough time frame, they always lose to Bitcoin.
Yeah.
Because it's not so much about utility. It's not so much about, it's like you said, it's more about the firm groundings of what Bitcoin is. And if you want a base currency for the world, Bitcoin is really the best out there. So I'm with you on that.
Yeah. And I think that, like in my book, I kind of break when I think about that problem. I do that in like the first chapter, but I think like the three, and I don't know if this is completely exhaustive, but this is just kind of where I got to. I think like the three things that ultimately constrain whether or not there will be like one form of money is, sovereign coercion. So the ability for governments to control things. And that's why we have so many different currencies today. Information opacity, so the amount of how transparent information is today versus how it used to be. Like if you go back in time, a lot of the reasons people were using different forms of money was just because they're in different geographies. Nobody knew who each other were, and they're just using different money that was kind of native to wherever they were. But now that we have the internet, information opacity has been largely reduced. It's not perfectly reduced. Not everybody's on the internet. And, even governments can still control telecommunications. So it's not like that's going to be perfect, but it's been largely reduced. And then, like monetary utility trade-offs. And that'll be the big thing, is whether or not there is going to emerge at some point in the future some sort of major utility trade-off between Bitcoin and something else in some like edge market, I would say. And it's possible. I mean, I don't know. But in any event, that'll probably be like maybe best case scenario 5% of the market. So why would you care that much about that?
Yeah, that's fair.
Yeah.
So you went, fuck yeah, I'm going to go and write a book.
Yeah. So I'll hop back on the story. I wasn't like, okay, I'm going to go write a book for this industry. I was like, I came to the conclusion, I was like, dude, you read about this all the time. It's what you care about. It's what you're interested in. It's like fun to you. It's your hobby. Maybe you could do something this direction. And then I had to like kind of put together in my head, like, okay, well, from a career perspective, it's like, I want to get involved in this media side of things. Like I enjoy that. I'm good at that. That's one thing that like can, there's not a lot of people that are like highly analytical I met in my past career who are also like really good communicators. There's oftentimes I'd see a trade-off with that. And I was like, okay, well, if I can communicate stuff well, and I love like educating people on stuff, then there's a route I want to go in that as well. So like that's kind of the framework I had in my head, and I wanted to, I just wanted to be more open and like transparent about things, and tell a story to the world. And
you felt like you could carve a space within the Bitcoin space as that guy.
Right. Yeah. Like, I mean, I didn't even know what it was yet, though. I was just like trying to think like first principles, like here are the things I'm interested in. And, I could probably figure something out. And so I kind of put together a plan where I was like, okay, I could probably go for like, 2 to 3 years runway and figure something out, because I just didn't have a lot of time to like, work after hours at my prior job. So I quit my job and decided I'm just going to like jump full time into this industry. And the first thing I did was take like 3 months off and reconnect with a bunch of my old buddies, and had, like best summer of my life. It was good for the soul. And then I started getting to work, and I put together like a curriculum for myself. And it was like, that was a whole process in and of itself. Cause it's like, what books do I read? Well, you kind of find this stuff out from like Twitter, which you have to get like first, you hop in Bitcoin Twitter, you see Peter McCormack, you see like Pompliano, you like follow them for a bit, and then you see other people after that, and then you follow them for a bit, and eventually you have to see, okay, I agree with these people, I disagree with these people, and then that's like at least a multi-month process of even like figuring out where all the like deeper information lies. So it's kind of like this whole rabbit hole you have to go down to even acquire the right information. And now that's a lot better than back then, but that was a whole process, and I put together this curriculum for myself, and, I got deep into just like, money, history, banking. I had to like teach myself, like I didn't know anything about computers really before going into this. Like I had some knowledge. We were looking to buy a semiconductor company one time, and I learned a bit from that, but like didn't know that much. I had to teach myself Python to do like Jimmy Song's programming Bitcoin book, which I wanted to get to, because like, when in my job, it's like, if I want to understand a company, then I need to model out all the details of it. And it was kind of like that with Bitcoin. It's like, if I want to understand how it works, then I need to like actually model out how it actually works.
You went deep.
Well, yeah. What sucks about that though, is like after I wrote the book, I haven't used a lot of that technical knowledge because I'm not like a developer. So like, it stinks because it's amazing how much knowledge that you can actually lose if you're not just like maintaining it all the time. Cause like I've kind of like de facto been, like this Bitcoin economics person on Twitter a bit. So I talk about that a lot, and I don't talk as much about like technical aspects of Bitcoin. So I haven't been just like, iterating over that knowledge very much. So I kind of lost it a bit, but that book was awesome.
Well, what did you learn from that book? In going down that rabbit hole of learning to program Python, what understanding did that give you of Bitcoin that I wouldn't have because I've not done that?
So it's just like it at a high level. I mean, not as much, but like, you see how actual like, keys are generated, and you see how like, you get like a bit of an understanding of like elliptic curve cryptography. And you'd be like, okay, so we use random numbers to generate keys, and that it's an important piece that form of randomness needs to be really good. And certain wallets can and cannot have good forms of randomness. And I'm assuming that most wallets nowadays are all good with how they actually do that. I don't know. But like you're aware of more granular risks kind of like that. And then like, like, oh, well, we all have this, common generator point that's used across all of Bitcoin. And if you take that random number and you multiply it across the standard point that everybody uses to generate wallets, the SECP, like 2K6 or whatever it is, elliptic curve, then that's how we ultimately generate a Bitcoin address. And through that, you can be like, okay, well, so if you take, that's effectively taking A, multiplying it by B, and equals C. And what I learned was like, okay, well, if you take A times B, then it's easy to calculate C. But what if you only had B and C, and you didn't have A, and you wanted to figure out A? You could just divide C by B, right, based on normal algebra. But no, like Bitcoin uses finite field math, or the SECP elliptic curve cryptography uses finite field math. And that's a very different form of math. And because of that, the way it's described, which is it's analogous, it's not perfect, but it's like a clock. Like operations are done similar to how you do math when you're calculating on a clock. So like you have something called an order. And when you have like on a clock, your order would be 12, the maximum number of the clock. And anytime you do a calculation and it exceeds that maximum number, then your answer is the remainder. So if I were to say it's 1 o'clock today, and I'm going to add 13 hours to that, then my answer is 2 o'clock. So it's the remainder. It's not 13 all the way around. It's just simply the amount that's greater than 12 after that. So like for that reason, we can use these forms of math to create. And if you use prime numbers and really, really large numbers as the order, then this is more just about cryptography. But it's very hard for computers to run division problems when we use that type of math and we use very large numbers, because they can only solve these forms of division through iterative guesses, which means that requires computing power to do. And if you have big enough numbers, which like Bitcoin's, the order of the generator point for Bitcoin, I think is like 10 to the 77th. And like there's like 10 to the 80 atoms in the universe. So it's like, it's just like incomprehensibly large number. So because of that, it would take, and this is like a quote from Jimmy Song, it would take 1 trillion computers doing 1 trillion calculations per second, 1 trillion years to find an answer to that division problem for any given Bitcoin private key. And that's what makes it so secure. So like things like that, like you fundamentally kind of understand how the security actually works. And then you're like, okay, that's good. Because like when I'm talking to like a boomer or something and they're like, okay, well, what if my Bitcoin gets hacked? I can explain that to them. And they're just like, oh, okay, I get it now. It's not going to get hacked.
Right.
And like, and things like that make a lot more sense. But you know, quite a bit of detail. Like I said, I don't remember all the details, and it gets very technical. And anybody who wants to understand exactly how Bitcoin works, I highly recommend it. But you get to see how actually a lot of the code works.
So you went down the rabbit hole of his book,
yep,
a few other books,
and yeah, I mean, I read so much. There's a bunch of different essays I read, and all of these things, like far corners of the internet, I had to go to like find a lot of information. I did a lot of reading through like old papers of the Federal Reserve to kind of figure out things that figure out some of the nature of the thinking behind how it worked. And through that process, when I was kind of done, I was like, okay, well, what's my next step? And I was like, okay, well, I should probably just be like writing this stuff out so that I can really understand what I think about this industry. And I started off just like, okay, well, I'm going to write like a series of essays. And then going on that journey, kind of midway through that, I was like, okay, there's so much I want to write here. I'm just going to turn this thing into a book. And I guess I can do that. Like anybody can publish a book. So, so I started doing that. You know, I think my book's like 14 chapters, but I probably wrote a total of like 18 chapters and then ended up removing a lot of them.
What got the cut?
I had a chapter that focused quite a bit on inflation, and inflation was too much of like a pie in the sky type debate, I think, for me to include that as like a fundamental chapter of understanding Bitcoin. And I was like, you don't necessarily need to understand this. Like that was like a really good example.
Well, some people question Bitcoiners' use of inflation as a reason for Bitcoin, because some people believe that Bitcoiners sometimes misunderstanding inflation. They're putting all inflation down to expansion of the money supply.
Yep.
I did an interview with Cullen Roche recently where we discussed inflation. He said, well, no, inflation comes from multiple reasons. It's not just an inflation of the money supply. It can come down from the growth in the economy, productivity. So it's a more complicated picture.
Exactly. I see this so much on Twitter, and it's like aggravating because like it's so hard to debate these topics without like a holistic picture of things. And everybody argues for things in a very myopic way. They'll just be like, okay, they understand one aspect of what's going on, and then they'll like push their narrative for that aspect. And it's like, you want to be very holistic with how you're making this argument. The way I like to think about the inflation argument is there's like 3 primary buckets. You can make arguments for or against whether or not prices are going to rise or decline. There's the supply and demand aspects, and that's a massively complicated argument to make because if you're talking about inflation as like a general rise in prices, and then you're talking about the supply and demand aspects of that general rise in prices, and we're talking about a bunch of different markets all over the world at any given point in time. And like, that's incredibly complicated to make arguments for. And you can say like general trends for things. You can be like, okay, well, you know, we're going through a commodity cycle right now. There's a lot of underinvestment. that could be very inflationary. That'll resolve itself. And for like the energy industry, for example, maybe it's going to take 5 or 6 years for us to like start capitalizing that industry enough to solve those problems. I don't really know. I'm not an expert. I just like listen to what my friends in the energy industry say. Or like, you know, if the supply and demand imbalances and people are like, okay, well, that should be resolving itself pretty soon. It's like, I guess I don't really know. There's probably a small group of people who really know the answer to that question pretty well. And then a lot of people parroting what they hear from other people. So the supply and demand bucket, and then there's the measuring stick, which is it's our money. And there's the question of like, how do we measure that? And what's the appropriate way to measure the money supply? And then there's also how we measure the measuring stick in supply and demand, which is the CPI. And I can go into like all that about the CPI, but that's highly debated. And then there's also just people who are defining things differently and not talking to each other. Like there's a lot of people in Bitcoin, and I hear them because I'm a big person. Like definitions are very important. But what's more important is speaking in the proper terms of the people that you're talking to so that you don't talk past each other, than being right and then, you know, telling people to go fuck themselves or whatever you do. But like, it's important to like actually get your point across. And like, I think that with, you know, this inflation piece, there's a lot of people in Bitcoin, they're like, okay, well, the Austrians used to define, or inflation was originally defined by, you know, an increase in the money supply. And over time, we've kind of gravitated away from that. And now inflation is defined as a general rise in prices, which is some arbitrary concept created by the powers that be that control these numbers. So I agree that it's not necessarily right, but it doesn't really matter because Federal Reserve defines it that way and mainstream financial media defines it that way. And that's pretty much how it works. So you need to communicate on those terms with people and make arguments for how that's defined and at least make a distinction between what you're saying, which I don't see happen all the time. So yeah, I just said a bunch of stuff to say like inflation is a really complicated argument, but
I think you're right though. Perhaps that's a second book.
Right.
What's it like approaching a book for your first time?
Oh, honestly, it was like, I really give a shit about this stuff. So like, it was actually pretty easy. Like, not easy. I don't want to sound like arrogant. It wasn't like easy. It was hard. But it was fun. Like, I don't know. I'd wake up at like 5 a.m. all the time and just like wake up and just like write all day. And, you know, I'd be like I have this cold room in the basement with like my hood up and I just like sit there and just like write about stuff. And it's like, I was thinking through things for myself. So I went through a ton of iterations on it because it's like, you think through something and it's just like, how would that look if the whole world was scrutinizing it? And then you're like, okay, that's not a complete thought. And then you're like, okay, I got to go back to the drawing board. I don't understand this well enough. And there were periods like that where like I'd write for a bit and think I understood something. And then as I write it and as I try to conclude things, I'd be like, okay, I don't understand this well enough. And then I'd go like research for like a week or something or a few days and then get back to it.
And there's a lot of Bitcoin books out there. A lot.
Yeah.
A lot of very good Bitcoin books. What did you want people to get out of this one that was different?
Yep. So when going through that whole process of just, you know, reading everything that I could. And like back then too, once again, like there's a lot of Bitcoin books that I haven't read and, you know, I probably should read, but like back then I just wasn't aware that they existed. And, you know, I wrote the book that from what I'd been researching was the book I wish I had been given when I first discovered Bitcoin. Mm-hmm. And I think that
So you're saying you've written the best book on Bitcoin?
That's exactly it. I mean, I didn't say that, but
I mean, I did.
But yeah, it was, I think coming, yeah, go ahead.
But is it more for, so something like, for example, The Bullish Case for Bitcoin, I think is a great book for my normie friends to say, when they say, Pete, tell me about Bitcoin. It's like, just go and read this. That'll give you the basic understanding of the history of money and why Bitcoin's the best form of money. I feel like with your book, it's probably a little bit more higher intellect level. So maybe people who've got a broader interest in economics and a deeper understanding of why Bitcoin matters. Yeah,
it's definitely, it's geared for people with a background in finance and economics. But I was very surprised at some of the demographics it started to hit with. It was kind of odd. Like when it first started to get traction, I started getting a lot of emails from dentists. A a lot of dentists like the book. And I was like,
Interesting.
that's cool. I'm happy with that.
Did your mum read the book?
Mom got all the way through the book.
Yeah.
Yeah, she did. And she was talking to me a little bit about elliptic curve cryptography one night. I was like, damn, Mom.
Damn,
like,
Mom.
damn.
And did she buy some Bitcoin at the end of it?
Oh yeah. She bought
Mom.
the dip too.
She bought the dip. Go, Mom.
She's kind of a good barometer. Like if I ever get a fund set up, I will probably use my mom as my barometer of when's the right time to buy, because every time there's a dip and she's kind of like, okay, I think I want to get some more. And I'm like, are you sure? Like could go down more. And she's just like, no, I think now's the time. And she like gets to the bottom nearly every time.
So I used to have the mom test with my, when I used to work in digital marketing.
Yeah.
Whenever we had a new project we were working on, say as a new web build, UX was central to what we did. It was the foundation of every project. If the UX doesn't work,
Yep.
the website doesn't work. You have to have a solid foundation for the user experience. It would always go to my mum and say, Mum, test this. See wherever she got stuck and what she didn't understand.
That's the best way to do it. And like
Mums are the best.
Moms, I love mom. Love mom. Shout out to you, Mom.
Talk to me about central banking. What did you learn about the establishment of the Federal Reserve and how it's changed?
Yeah.
Like, did it start with honest intentions? I know some people argue no, it's always been evil, but
So that's a hard question.
okay.
Just because I think that it depends. It depends on the person. There's a lot of people involved, obviously, with starting this organization. And I think that there was definitely a core group of people who I don't think had honest intentions. And, they definitely had selfish intentions. Maybe they were honest. So, the Federal Reserve was founded in 1913, just before World War I. There was a Jekyll Island Club, and that was Senator Nelson Aldrich, the Treasury Secretary at the time, and then like 5 different Wall Street bankers who a lot of them had ties to England. The initial group of people that were creating the Federal Reserve, and then also how they positioned it, they didn't use the words like central or bank in the name as part of their public marketing campaign, because the public historically had a very bad taste in their mouth over central banking. There had been 3 central banks that were created and fell before the Federal Reserve was created.
I didn't know that.
Yeah. So
why did they fail?
Well, it's complicated. So there was the Bank of North America. And, that was created pretty much to finance the Revolutionary War, and that it was closed after that. And then there was the First Bank of America. And that was closed there was this battle between Jefferson and Andrew Jackson, or Alexander Hamilton. That was a very controversial bank, and they ultimately had a very high degree of inflation. And I think it only lasted for about 20 years. And it was ultimately closed when Congress voted to close it after that period. Just inflation was getting very high. And then there was the Second Bank of the United States. And that one was probably the most interesting and more modern. And so basically the bank was created, and there was this chairman, Nicholas Biddle. And he was, this is just like the factual story. And there's a lot of ways that people could read into this, but the chairman created it. And when Andrew Jackson was up for his second run at presidency, he was campaigning to close the bank, and he wanted to move back to gold. And he was actually campaigning and paying people with gold during that time. And Nicholas Biddle was kind of campaigning in an alternative way. And he was like paying off members of Congress by advancing their payments from the Fed, because the Fed is like the treasurer of U.S. funds. And he was also paying members of the media to like support a lot of what was going on with the central bank during Andrew Jackson's campaign. And Jackson, one day he decided, he's like, okay, we're going to pull the Treasury's account from the Fed, and we're actually going to hold it ourselves. And that was very bad news for the Fed. That was a very large portion of how they were generating revenue as an institution. So Nicholas Biddle created this deliberate economic contraction, and then was paying off the media to try to get them to play it off as if Andrew Jackson, it's his fault. He pulled his money from the Fed, and therefore we have to contract the money supply, when he just raised interest rates. And then he was ultimately charged with fraud. And, they closed the bank immediately after that, or not immediately, it went through a court process, but, years after that, it was all closed. And that bank effectively ended in a fraudulent way of the chairman. And, that paired with this kind of like, national banking system that we had after, and some of the fractional reserve issues that occurred during that, was ultimately what made the public really not trust how central banks work, nor banks in general. So, and this isn't just either in the U.S. This was in England. Similar things were going on in France, and I kind of highlight that a bit in my book. Is like there's this pattern throughout history of these failures where it's effectively like it's not true in every scenario, but it's true in most of them. There's a need to finance war. Central bank gets created. They print too much money. Back when, people were a lot of these banks were running on a gold standard, and fiat was largely rejected by private markets back then. There would be, too much money printing beyond the gold reserves. War ends. People realize, the money's been debased because now they're demanding it in gold. The gold's not there. There's some sort of run on the banks. And then, inflation ensues, price controls get implemented, supply shortages occur, and then it's literally eerie, because I wrote this book before all this stuff happened, or not before all this stuff happened, but the price controls and stuff hadn't popped up yet, so I was like calling for that on Twitter a bunch.
Wow, there's been certain calls. Elizabeth Warren has certainly hinted that price controls should be implemented or are required. And so it's really eerily like what is happening right now.
Right. And then like the last major thing that happens is after that, it's just like a ton of economic dislocations start occurring. And then there's eventually some form of regime change that occurs. And that's kind of, I think we'll probably follow a similar pattern at some point. It might be a bit more drawn out just because of how we can our system's structurally different than how it used to be. And there's a bit more control over it. So I think it can be managed for a bit longer, but regardless, taking that all back to like the Fed. So the Fed was created before World War I by a bunch of wealthy people. So that Jekyll Island Club was estimated, and this was in a major magazine publication back then. I can't remember its source in my book, but 1/6 of the world's wealth was represented by the group of guys who were on Jekyll Island. So
it was really about protecting themselves.
Yeah, I mean, there's a lot of ways. There's like the book, the famous book, like The Creature of Jekyll Island, and like he reads into a lot of that stuff. And I don't know, maybe he's right about some of it or all of it, but it's just not really a firm way to make certain arguments. And this is one thing that I tried to cling to in my book, is I was like, I didn't want to get too tinfoil hat with anything. I just wanted to say, here's factually what happened, and you can read into things. But here's kind of the facts of certain situations and the ultimate outcomes that occurred, and we can kind of see a pattern with a lot of this stuff. And I also wanted to source a lot of my information. I do source information from, I source information from Creature of Jekyll Island. I source information from a lot of Austrians. But I also made a point to source a lot of my information directly, like from the Fed or from alternative sources. And I think, even doing that, like the story just kind of tells itself with the Fed. The Fed has had 16 material economic recessions since its inception. It was started as with the goal of just price stability back then. And it's had a recession on average every 7 years. And there's the symptoms of like our fractional reserve banking system that was ultimately used to justify why we should have a central bank controlling monetary policy, because people are incapable of doing it themselves. Those symptoms are more just related to the fact that we have moral hazard inherent in our system through bailouts. As long as that exists, then private markets are going to act based on that information. And if we can eliminate that, which is what Bitcoin's a solution to, then we should expect that market actors will be relatively rational on the whole. And that'll probably take an adjustment period. Like I see if we were on a Bitcoin standard tomorrow and we have a bunch of we have some sort of free banking system emerge, I think that a lot of people are probably going to be, we're probably going to have a lot of banks that take advantage of things and they fail and they extend too much credit, and their reputations will be at risk and they will fail and not be bailed out. And that's the key thing, is it'll probably take some time for people to learn, But I think eventually people will learn, and banking institutions would learn that, well, we fail. When we fail, we fail. We can't, privatize our profits and socialize our losses anymore. And that'll probably take time.
And the Federal Reserve has survived 108 years. Why did the Federal Reserve survive when these other three banks, central banks before them, failed?
Ooh, that's a good question. I haven't gotten asked that. So because of us being, the Federal Reserve effectively put us into the most dominant international monetary position we could be. And I think that that's something that's kind of underrated a bit when people talk about Fed policy today. It's not that people don't talk about this, but a lot of people are like, oh, the Fed's constrained by inflation. And that's true. But there's also a whole international monetary game going on, and it's incredibly important for the U.S. to continue to maintain this perpetual trade deficit that they have. And the Federal Reserve is instrumental in that process.
Explain to people why they must maintain that.
Yeah, so it's effectively, in the simplest terms, and this is complicated, but in the simplest terms, it's just that when the U.S. is so 80%. Oh, this is interesting because recent news was, so in 2019, 80% of foreign transactions were conducted in the U.S. dollar. Just like contracts are made in that, and people are conducting trade, and those are general estimates that people get to. And then 60% of foreign reserves are in the U.S. dollar. So that's effectively like the power that the Federal Reserve or the U.S. dollar has in the global economy is that people need to use it to conduct trade with one another. And so if people stopped trading in the dollar tomorrow, if that just went to zero, then there really wouldn't be a need to hold it in reserves anymore. So those two numbers are like pretty tied well to one another.
What would the implication of that be, though?
What do you
less demand for the dollar?
Yeah, less demand for the dollar. It would be that people are conducting trade in alternative forms of money, whatever that would be. And that would mean that when people are, so the better way to answer that is for me to go back to the beginning. So like when the U.S. is in this position where people need to use dollars, then there's demand for dollars at a global level. And the U.S. can create dollars, aka nothing. They don't create a good, they don't create a service, they don't have labor, none of those things. They just create dollars and they supply them to global markets in certain situations. And then the global markets can pay them back in labor and capital. So they get resources back in some form. So it allows us to trade nothing for something. And that's a huge position of power to be in. France would refer to it as the U.S. exorbitant privilege. And that is, it's something, when people look at like these labor intensive economies like China and India, and it's like, well, how come all of our labor is being exported to those economies? And it's because they can artificially suppress wages to make themselves competitive in a global environment to be able to export that and receive, dollars in return. And that comes at the cost of our domestic labor force for a lot of these blue collar industries. And there's not enough jobs and wages are getting too low. And it's because they have to compete against artificially suppressed wages abroad. And so that's referred to as like the Triffin dilemma. And that's just like an example of one of the costs that comes from this when you're the world reserve currency. So the world reserve currency has benefits internationally, but it also has costs domestically. Mm-hmm. And that ties me back perfectly to what I was going to say with the Federal Reserve back in the Great Depression. So we got to this point where, England, and from the period of like World War I into, the Great Depression era, the gold standards were kind of on and off for certain economies throughout the war. They were turned off and then they emerged again. And what happened is like after World War I, England was in a very weak monetary position, and the U.S. was attempting to help them. So like a little background, when you're on a gold standard and you want to attract gold to your country, then you want to have higher interest rates. The higher your interest rates are, the more people will take money from their lower interest rate economies, they'll borrow it at a lower interest rate, and then they'll invest it in your economy with a higher interest rate. So that, depending on your monetary policy, you had a trade-off. You can have low interest rates at home, and you can have credit expand at home, and you can have a more thriving economy, but that comes at the cost of your international monetary dominance because your gold starts to leave the economy, and currency isn't as sound at that point, especially when you have a mandated gold standard that you need to abide by and people get worried. So that was kind of the trade-off that was going on between England and the US. And the US was supporting them for a period of time. And they ultimately, the US was effectively lowering interest rates to support England in some, because the US had a ton of gold and England didn't have much at all. And they were lowering interest rates to support England and have some of that gold flow back into England. And then it was like the panic of 1921 happened when the U.S. raised interest rates from, it was like 1.25% to 6% ish, and that effectively just like caused this little like mini recession or kind of large recession, and then we went back into this low interest rate environment immediately after that again, and then like the Roaring '20s spurred and the stock market was flying, and then it was around like 1925, England started to get to a weak position again. And, you know, mind you, they were the global monetary standard back then. And they, so the US once again was like lowering interest rates to try to support England. And what was interesting is when we got to this really frothy level in 1929 before the stock market crash, and then flowing into like 1931, is some of the monetary policy decisions that the Fed made during that point in time. So back then, so like around like 1931, the mandated gold reserve ratio was 35%. And the US had reserves of around 51%, and they were still raising interest rates. And that's, I argue a bit for this in my book. There's a lot of dynamics that affected this, but I don't think this point's really talked about a lot. The fact that we were so far above our mandated gold reserve ratio, we didn't really need much gold, and we spiked interest rates, you know, effectively causing a depression within our economy, and then also taking international monetary dominance from England during that period of time. I think that that's a strong argument that the U.S. wasn't motivated to support their economy domestically. They were trying to gain international monetary dominance over England during that period of time. And what's also interesting is when Executive Order 6102 went into place, that 51% turned into 61%. So after that happened and we confiscated the private gold, we were, you know, getting close to double the amount of our mandated ratio. So that was, so I think that motivation is really, really important. And like when you bring that kind of to today of something more topical, so I was quoting those 2019 numbers for 80% of foreign transactions are in the US dollar. And with, there was a Wall Street Journal article last week, and I tweeted on Twitter, and it didn't get as much love as I thought it deserved. But in this article, there was a statistic, and there's this report out of this research firm. It was like ING, I think. I can't remember exactly, but it was, you know, in the Wall Street Journal that 80% number from 2019 is estimated to be 56% now. So that means US dollar transactions on a global scale are estimated to have declined from 80% to 56%. That's a matter of 2 years. That's a very large decline. And like we have a petrodollar system still in place. It doesn't mean that like the US dominance is going away overnight. There's still a lot of transactions conducted in the US dollar, but that's a huge change. And it's something that I want to do more research into.
Yeah. What are the implications of that?
Well, it just means that, you know, Russia, so since like in 2009 during the Great Recession, China and Russia were calling for a neutral global currency. And like, there wasn't really an option back then. There was like the IMF, like SDRs or whatever, but those don't effectively work for anything. And so there wasn't really an option, but like, you know, China and Russia had been wanting to get on a neutral currency because of this US advantage that they have and because of this game that they have to play. So when we were calling for that, they were calling for that back then. And then China's been effectively, I think since like, what was it, like probably like 2014, they started to significantly reduce the amount of US dollar reserves and debt that they were holding. And then Russia has been effectively doing the same thing. They're just, all these economies are trying to wean themselves off the dollar so that they can operate autonomously, or at least to relatively more autonomously than they were before. So like right now, Russia's looking to invade Ukraine. The US is like economic sanctions. What do we do? Well, we can exclude their banks from like the international SWIFT system, which is the system that's used for US dollar transactions internationally. So it's a major point of leverage because so many transactions are conducted on the system with dollars to exclude other banks in a particular economy from using it. That hurts their economy quite a bit. That hurts how they can actually trade with other people and get the resources that they need. So with there's economies are realizing that the U.S. is taking its monetary position, and it's when you are the global monetary reserve and you expand your money supply 40% since February of 2020, that hurts these economies. That hurts how much value they have as well, and they don't want to be a part of that. So the U.S. is in a tricky spot now because not only do they have bad inflation, but they're also starting to lose international monetary dominance. And it's apparently, and I got to do more research into that, but it seems apparently in a much larger way than I was expecting. And that's just a pretty big deal. So like, I think when people are talking about like, what's the Fed going to do next? People are like, okay, well, we have this perpetual debt cycle, and they can't sustainably continue to raise interest rates because, because debt is expanded so much. Even very small increases in interest rates when you have such a large amount of debt outstanding causes massive fluctuations in credit. So like, just like the amount of convexity that occurs from it is really large. So we're in that position, which means we probably won't be able to raise rates for too long. And a lot of people, and until I saw some of this news, I was of a similar mind that we're probably going to see the Fed do some sort of fake out, and at the end of this year, they're going to be like, okay, we're lowering rates to zero. There's going to be some sort of crisis. But when I think about their international monetary position, and it's like, okay, well, what did they do in the Great Depression to gain international monetary dominance? And it was different back then, but they put us into a Great Depression, and we became an international monetary reserve, I think, effectively from a lot of those actions taken back then. And so where we are today with a similar constraint facing us again, we're not as constrained because the U.S. dollar is already a reserve. So we have some leeway there, and we have a petrodollar system in place, and we're not on a gold standard. So it's, but it still is a constraint to be considered. And I wonder if that continues to happen more and more, and we do see some of these major economies start to de-dollarize themselves, I could see the Fed taking a much more hawkish stance on what they're going to do with interest rates this year.
Interesting.
Yeah.
Have you read Alex Gladstein's article regarding the petrodollar?
I cracked it one morning, and I read the first few paragraphs, and then I didn't finish it.
So one of the most interesting things that came out of that and a conversation I had with him is there's still real confusion about why the Iraq war happened. We know now that Congress was lied to.
Yeah.
We know it wasn't a war that was created because of WMDs.
Mm-hmm.
But Alex put forward a hypothesis because at the time Saddam Hussein was looking to move off the petrodollar. He was looking to move to the petro-euro. And Alex made the suggestion that his hypothesis is perhaps that was a reason for that war, to protect the petrodollar.
And the hard thing about these conversations is there's so many things like we're kept in the dark about to really like fully understand these situations from like a military perspective. But with my limited knowledge, like I agree. I think that that's a major motivation.
Yeah, interesting. And so as we're seeing now, aren't we seeing Russia and China are now trading oil, but they're not trading in the dollar? I don't know. Are they trading in...
I don't know exactly what the alternatives are that they're opting into.
Well, I know they're looking at CBDC.
Yep. They're definitely looking into those. But I assume that they're trying to conduct as much of it as they can in their domestic currency.
Yeah. Interesting. Okay,
Yeah.
So are we finished on that?
Yeah.
Because my next question for you really is, a lot of people who are supporters of Bitcoin are supporters of the idea of having no central banks.
Yeah.
Now, without Bitcoin, what does the economy look like without a central bank? Just forget that we have Bitcoin. How does a country operate without a central bank?
Ooh. So I got
Is that more like is that essentially a free banking era?
a free banking type system. Yeah. So like we had like a while, and it's hard because like it's hard when you compare things to history. Number one, history is like one of the hardest things to write about, because to write about it holistically, there's so many facts, especially on these types of topics. There's so many facts and details that are relevant that you ultimately, like when I was writing my book, it's like some of my history, I'm writing it as a response because like I was educated on the alternative side of these things, and most people are. So I'm writing a lot of my history as a response to that, because it's impossible unless there's very few like intellectuals out there who want to go read some massive book that's just physically a recount of history and like you know, interpret it as you may. And it requires a ton of writing to really explain like small situations. I think like when you look at like our wildcat banking systems and like how property rights worked back then and how information was just not very transparent back then, I think a lot of the failure of these systems was due to things like that. And they still would work, but I think in our modern economy with very transparent forms of information and reputations online, the ability to like, you know, transmit that very rapidly, I think that makes the argument for a free banking type system much more viable. And it's effectively just like, you know, you have private banks that are issuing their own forms of paper that are backed by whatever they would choose to be backed by. And then they have a reputation that would be based around that. So it'd be something, people would be like, okay, well, I'm using First Bank of, you know, Malibu because they have a really great reputation and they're the standard. And that's what banks are competing for, would be some form of reputation.
So there'll be multiple currencies.
In a free banking? Yeah, absolutely.
So you would have the Malibu, Bank of Malibu dollar, Bank of New York dollar.
Right. Yeah. And like, I don't know, they could effectively like standardize and like form federations and things. There's a variety of ways that could all work out.
Do you think reputation would lead to a discrepancy in the value of those dollars? Yeah,
absolutely.
Interesting.
Well, reputation as well as like, it would depend on how transparent they would be. What's tricky is that you can be transparent with like blockchain technology, for example. Like you can be transparent about an asset, but you can't necessarily be transparent about the liability. So like theoretically, if it's like we're a bank, we have a website, and at any given point in time, you could look at our reserves to our loan ratios that we have outstanding, or whatever it is that's backing our paper. You would have to trust them on the actual paper that they're issuing, unless that was also on a permissionless blockchain as well, which I guess I haven't thought through how exactly that would work.
So do you think Bitcoin ultimately leads to the end of central banking, or could lead to the end of central bank?
I think it ultimately could lead to the end of a central bank. I want to believe, here's how I'll say it. I think that Bitcoin will reduce significantly the role and probably the nature of a central bank to, in any event, to be more of an administrative type entity as opposed to a monetary authority, something that would administer the system and allow it to function with oversight from some sort of legal authority. And not making monetary decisions necessarily. But on the whole, I guess, I think it's going to end central banks.
And the end of central banking and move more to this kind of idea of a free market for banking. What are the implications therefore on the economy? Does it change the market for cheap credit? Does it change malinvestment? Does it fix all these problems?
I don't think it fixes it, but I think it allows a private market to make those decisions.
Or reduce the extremes?
Yeah, exactly. I mean, there's economies still fluctuate, and this is one thing. So like, you know, people come at this from the perspective of like Bitcoin solves everything and it fixes everything and everything's going to be perfect and it's going to be a utopia. And it's like, at the end of the day, there's a reason that we valued more stability in a currency as well. And we were able to use that as a selling point. There is going to be volatility. Volatility will be inherent. Even when Bitcoin reaches maturity, it will still be more volatile than a currency that's supply is constantly backstopped to have stability.
Is that because of it's inelastic?
It's inelastic because every time the demand fluctuates, a central bank can change the supply to respond to that. So yeah, exactly. So we say which is an easy decision for a centralized entity to say, okay, well, as long as the costs aren't on us, then we can have this stable currency. And there are still benefits to having a stable currency. Ideally, we want to have both. So,
that's a really interesting point because, again, there are proponents for Bitcoin being the only currency. And I'm still in the place where I think we need two currencies. We need Bitcoin as more of a reserve asset, and we accept the fluctuations in its valuation. And then we have a more kind of paper, I say paper, you know what I mean, like a fiat currency, which is a bit more, has a more stable price, which protects trade, because massively fluctuating prices in trade is an issue.
And it's a global experiment right now. So when Bitcoin is 100 trillion in market cap, what is its volatility going to be at that point? We just simply don't know.
We don't know.
And but the good news is we do have alternatives for stability, and it could be used as like purely a reserve, and we can have some sort of other alternative form of money, and effectively it'd be like we could have the Lightning Network and then we have some sort of like smart contracts being built on top of that are creating these stable coins that can have various monetary policies that people can pick and choose from. And there'd probably, if there is a real demand for that stability at that point in time, then there would probably be maybe a handful of those that people are using in different areas for different reasons.
Yeah, I wonder how the Fed or central bank in itself actually ends, and what are the implications of it ending. Yeah, because there's clearly a period of pain for something like that to happen. There's no political will. Unless you are driven by long-term thinking and an ethical position on what is the best way to operate an economy. There would be no political will for the current administration or another administration to come and say, let's end central banking. Let's because they benefit from the fact there is a central bank. So the process of ending something like the Fed, I wouldn't even know where to begin. It's way beyond my pay grade. You might have ruminated on this.
It's funny because like when I go on podcasts, I get asked like a lot of the theoretical questions of the future a lot, which I get it. It's fun to like think through these concepts a lot. But like I think a lot of my thinking in these areas is it's just like it is so speculative at this point. It's like I don't spend a ton of time really thinking about it. I just think like, okay, well, what am I certain of? And what I'm nearly certain of is that Bitcoin's not going to fail. And I'm kind of moving forward with how an ecosystem is going to build on top of that. And
okay,
it's like,
talk to me about that then. Why are you so certain it's not going to fail? I mean, I'm certain it's not going to fail, but why are you so certain?
And this was one of the main reasons too, when I was thinking like, okay, time to go all in. It's just like we have, the cost of attack on Bitcoin is so high, just from like, I mean, even when you're quantifying it. So like, these are some like dated numbers, but like, I think it's like 40 billion in infrastructure, and then a run rate of like 50 million annually, or no, sorry, not annually. I think that was like a weekly number, to attempt to conduct a double spend on the Bitcoin network. And, the US defense budget is like, 80 billion or something. So it's like theoretically possible, but actually like implementing that.
Yeah. I mean, you've got to get you've got to build out the infrastructure.
Right.
You've got to be able to get the ASICs.
Yep.
You've got to be able to start mining and without really raising the eyebrows of people.
Right. Do it discreetly.
What's this new massive amount of hash rate that's happening in DC right now?
Right.
Under the White House.
Exactly. So like from a practical perspective, you can't do that.
It's impossible.
It's impossible. So it's like...
And people would fight back.
Right, exactly. People could fight back. People could respond. It would be obvious. I mean, there's so many different ways that would just not really be a possible scenario. And, once you get to that point, it's like, okay, so the network can't really be attacked anymore. And then that means now that it can't be attacked anymore, people are going to go with their next best incentive. And what I like to say is like, I think that the negative game theory behind Bitcoin of like that's how a lot of people, when they first understand Bitcoin, think. They're just like, okay, what are all the bad things that could happen to stop it? But it's like, that's not even the stuff you should be focusing on. What you should be focusing on is a positive game theory of what is going to be so attractive about Bitcoin that people are not even going to want to think about doing anything negative towards it. And that's at the end of the day, like, I operate like on the assumption that people are selfish, people respond to incentives, and we're going to continue to see that to play out as it always has. And it's going to be the game theory of these fringe economies that want to opt into a neutral global currency that's going to continue to expand. And that's just going to keep bringing people in.
Like El Salvador.
Like El Salvador.
And whoever number 2 is.
Yep. Yeah, I mean, Russia's starting to flirt with the idea. I mean, because at the end of the day, China and Russia called for a neutral global currency back in 2009. Bitcoin's a neutral global currency.
Yeah, and you don't want to be the last country to adopt Bitcoin.
Exactly.
I'm intrigued to see who's number 2. We're seeing rumors there's going to be another South American country.
Yep. Iran's in an interesting position too.
Well, they're not on the SWIFT network, right?
Right. They're completely removed.
Yeah.
I mentioned them in my book. I think that they could be a big, because I mean, anybody who just doesn't have that much to lose. And
Yeah.
all the major economies that have the most to lose, those are the ones that'll be last.
Well, it's a good point when you talk about positive incentives, because if you really think about it, the number of people who have the negative incentives is actually a very small group of people. It's like this little political machine
Right.
that operates out of Washington, London, Paris,
Yep.
yada, yada. And they're the people who have the most to lose, whether it's because they think at an individual level that this affects my career, or whether they're thinking at a more macro level, they think this is dangerous.
Right.
And most people would say, oh, they're politicians, they're being selfish. But I actually believe there are people who actually think this is dangerous, that fundamentally believe the idea of a decentralized currency is dangerous.
Yeah. Yeah, there's definitely people, and I think there's a lot of people who legitimately have good intentions who believe things like that. And I think that there are very few people who really fundamentally have read as in depth on some of these topics as the Bitcoin people. Like, I think when you have exposure to this stuff on Twitter, there will be like a few figureheads from the other side who've done some sort of understanding. And you're like, okay, this guy's making a few good points. He says some smart things. And then they'll like say something. It's like, okay, that's not a very good point. And I think that like you get exposure to like some of these figureheads, but I think that like when I talk to like some of my buddies who are like much more liberal minded, much more like Keynesian economic type thinkers, like they genuinely think the Federal Reserve does its job and it's a good thing for them to implement stability, and they haven't spent much time reading into a lot of different things.
Yeah, and you're trying to sell fringe ideas.
Exactly. Yeah.
I sit down with my friends and talk about Bitcoin with them. I certainly don't sit down talking to them about Austrian economics or libertarian principles, because they just won't buy the idea of no government. They won't buy these. So it's really difficult. And I did an interview recently. I had Balaji and Glenn Greenwald on together, and Glenn made the point. I can't remember it. Do you remember what he said, Danny? It was with. He said one of the things that Bitcoiners have not been great at is selling the concept of Bitcoin. It comes too much from a libertarian angle, which is something some people haven't even fucking heard of.
Yep.
And when you start to talk about the ideas or libertarian ideas, they're like, what the fuck is this? This is not a world I've ever considered we could live in. So it becomes fringe.
Yep.
So it becomes little bit difficult.
I completely agree. I mean, when I was first kind of getting into this area, when I first got exposed to Bitcoin Twitter,
what?
Yeah, I was like, what the fuck is going on in this place? Yeah, it's crazy. I always thought before I got into this world, I thought I was like an extreme fringe view. And like I come into this world and I'm much more moderate.
Yeah.
And
similar.
I'd never met people who are anarchists before.
Mm-hmm.
I won't deluge on any of that, but like, I kind of see the intellectual side of what they're going for. I disagree for a number of reasons, but like, I get what they're saying. But before, it's just like I thought anarchists were just like, people who like punk rock and like want to break shit.
Yeah. G8
Yeah.
conferences, smashing up McDonald's and black outfits.
Yeah.
Yeah. That was an anarchist to me. And I actually think it is an interesting area to get in. I actually do want your position on this, because I sometimes, as a more moderate European Bitcoiner, I feel quite isolated with my opinions in this area, and that I'm not I get called a status cuck.
Yeah.
And I am, despite, I had a great conversation yesterday with Vijay Boyapati, and he definitely showed me the picture of how society evolves beyond democracy. but I still felt there's like some flaws in it. But what he was talking about is not whether I like it or not. It might become inevitable anyway. But I'd be interested to know what your thoughts are, because I, on paper, fundamentally completely agree with the libertarians. I think they're 100% right in the theory, but the theory doesn't account for human behavior.
Yep.
And I think that's the number one problem is like libertarian ideals are great if you're libertarian minded, or but if you break down some of the structures of society, other people aren't libertarian, similar minded, and I think perhaps the net impact is negative. So you might have, for example, the ultimate freedom, which is the idea I talked about with VJs. Like, and he actually brought it up. It was interesting. He said he understands that there are risks of pure freedom. There are risks in the structure of society. I'm more interested in what we've lost from progressives and the civil rights and equality side of things that we may lose in a libertarian society. But I'd be interested to know your thoughts.
Yeah, so I think, so I guess like for the extreme of like anarchism, it's this idea that people can operate in like localized groups is fine as long as people choose to do that. And people don't choose to do that. People choose to organize and form hierarchies and scale those. And they do that because there's a lot of efficiencies to be gained. And like that type of vision for the future, I think, can only exist if the cost of those efficiencies gets lowered so much that it's no longer a consideration. Then localization makes a lot more sense. And I think that that's what technology is bringing us towards over the long run. It's definitely a tech-enabled idea. And then bringing that a little bit closer into like libertarianism, libertarianism defined as an individual is entitled to the fullest extent of freedom as long as that freedom does not infringe upon the rights of others. And that's saying a lot. Like, I remember I would work with some guys who said that they were libertarian, and then we'd like talk about stuff. I'm like, dude, you're not. Like, you got to sign on to some shit, like, to really be a libertarian. And like, I think that the two primary issues that I think are very gray and very hard to resolve under that doctrine is that natural monopolies and negative externalities. Those are the two like really big things that are hard. So like natural monopolies will continue to form as long as like resources are constrained within particular areas. And until those resources can be moved easily enough, which is, I don't know, it depends on a lot of different things for different industries. The natural monopolies will always form. So that means either the resources need to be able to move or the people need to be able to move really quickly. And it was interesting. One of my friends gave me this book years ago. I never even read the whole thing, but it was on this idea called seasteading. And it's like, how like Peter Thiel wants to have like a private libertarian island or something. Yeah. It's kind of like that, but like for the world, it's like a bunch of people have these little, like everybody's house is like a puzzle piece floating all around the world. And like, you can like, drive your house over to one island and everybody like puzzles their houses together or whatever. And they have this like island that everybody can like aggregate together on. And that island is subject to certain laws. And if you like that island, you can stay there. If you don't like that island, then you can leave and you can go to another island of people. And
American Huddle's in the house. What up, dude?
What up, dog?
Do you know Eric?
No, we haven't met.
Sorry, do you know? Wow, here we go. We got Eric Yakes. We got American Huddle. Hey.
I'm going to be chilling after.
Dude, I got your favorite here. Look what I got. Look, buddy. I got a bottle of Blanton's. You want some? Go on. Hook him up. There we go. So I'll compare it to something that VJ talked about yesterday, and correct me if you think if this is as a poor analogy, but what he was talking about is beyond democracy. What happens beyond democracy if Bitcoin takes us to that place where governments can't function? We essentially move to the city state, which is essentially almost like each city or becomes run more like a company with a leader and just run. And then if you like the rules in Miami, But you see there's better rules down in Santa Monica. You can move to that city state. Is that a similar concept?
It's conceptually similar. The problem is the cost of mobility.
Right.
And that's what it boils down to. And that's what like this whole idea of seasteading is like a solution for, apparently. And I'm not saying
you do it on the ocean.
You do it on the ocean, you can like float around more easily.
It sounds like a rich person.
Sounds like a rich person thing, yeah. It's not going to be very easy. And then it brings us back to this idea of like Elysium. You ever seen that movie with Matt Damon?
Up in the sky.
Yeah. And it's just like, I inevitably see something like that occurring at some point in the future. I mean, humans have always evolved in ways like that, and certain people accumulate more capital, they'll probably continue to organize with one another. And I don't know how that all works, but it's probably not as simple as like everybody, wealth inequality gets super reduced and everybody lives together and we have a perfectly, highly mobile form of society that people move across, they can traverse across whatever borders between one another. And we have a competitive market of like government organizations that people are living under. It's probably like people are branching off and doing different things and people are organizing with each other because they have something more in common, which is also, it's good and it's bad. Like, if all the rich people left tomorrow, and went up into space, then that leaves everybody else in society with the same amount of resources to say, okay, time for us to take leadership roles and see what we can do about this place. And, that could be a good thing. It would also be a hard thing. And as long as the rich people aren't like mining the resources of the earth and then extracting things, then it would probably work out in the long run. But it's not really, it's just it's a hard question to answer, and there's always people that will get left behind in any of these equations at the end of the day. The question is, what's the net benefit, and who has to make the hard decisions to have that all pan out?
Yeah, the net benefit, that's the one I think about a lot. On multiple topics. I find healthcare is a really interesting topic. We have a socialist healthcare system in the UK. Whether you put money in or you don't put money in, if you're in a car crash, you have a heart attack, you will be seen.
Yeah.
It doesn't matter what your social status is, what your economic position is. And now listen, if you want to opt out of that, there is private healthcare, and it's very reasonably priced in the UK. Embarrassing for the US how reasonably priced our private healthcare is. I mean, I get private healthcare for me, my son, and my daughter for £180 a month. When my back went, I was in hospital within 3 days being operated on. I mean, for that cost, it was fantastic. But I think the top end of our healthcare, I was explaining this yesterday, is not as good as the top end of US healthcare. Mm-hmm. Our cancer services are just not as good as US cancer services. If you have a very serious cancer, you're going to want to have the money or raise the money to come here and be seen.
Right.
But we have that. It's like, what is the net benefit? Yes, the US has a capitalist system. Well, it doesn't. It has a fucked up healthcare system. But we have a socialist system. If you're anti-socialist, you'll hate the NHS. But the net benefit is everyone in society, whoever they are, can get seen. And it's not going to have a long-term detrimental economic impact on them. And so I think those net discussions are really important, because then when you discuss anarchism, you have to say, well, I might have ultimate freedom. I have nobody who can rule over me. I have property rights. But what is the net benefit to society? Does it lead to a worse society?
Right.
What is the impact on like equality? What is the impact on civil rights? What is the impact on human rights? Is the net benefit not there?
Right. And then it comes down to your timeline of consideration as well. And that's the hardest part, is that because we're limited in lifespan, people think within those time periods, and because we consider things from shorter perspectives than the indirect long-term consequences of our decision making, it might provide short-term benefits for 50, 60 years, but eventually we've created an incentive that erodes at the infrastructure that's underlying all of that, and that can ultimately have the system crumble. And I think that's what we're seeing happening with central banking.
Yeah.
And in as much as like centralizing services because it provides a net benefit is a good thing in certain situations, it's always hard. And I'm no expert on healthcare, of like what's the optimal limitation of government power over a very important good or service for an economy, and then how constrained should they be in actually having control over that, particularly when it's a critical input to people's lives. That is the trade-off between that and, okay, well, we can provide, something that's socialized that can benefit people, and people can be more comfortable that something bad happens, that they're going to be okay, which is a big benefit. It's hard to say. It's hard to quantify. A lot of uncertainty, and some people are incentivized to want to control things, and it can lead to negative long-term outcomes. But I don't know enough to be like, okay, administrative costs are this level, they should be this level, and the government should have this level of control. That's optimal for the next century. Like, it's a very complicated question.
Yeah, interesting to talk about though. And one of the things I've harped on about is I wish from libertarians more, and I know it's antithetical to being a libertarian for many of them, but it was engaged in more of the politics, because what we have is this traditional left and right. Like in the UK, we have more of a 3/4 party system. Yeah, not like the US, a 2-party system. But either way, there's always a pull from the left and the right. And if you have too far to the right, we end up flipping back. We just have this back and forth, and we have this escape valve called the Lib Dems. If you can't support either party, that's what you go for. But when you've got this pull from the left and the right, it doesn't stop government getting bigger and bigger and bigger. And I just feel like if you had libertarians more engaged in politics, you would have that push and pull that would hopefully make government smaller.
Yep.
And I think that would be a more ideal situation.
Yep. And I think that push is probably going to come through a technology-enabled movement.
Kind of like Bitcoin.
Like a Bitcoin. Yeah.
Funny that.
Yeah. But I think that, I would typically, I didn't vote like the last election cycle, but the last one I voted, it was for, in the US, it was Gary Johnson. And, he was the fringe libertarian candidate saying a bunch of crazy shit. And it wasn't even that I totally agreed with everything he said. It's just like, I would always say, like, if enough of us start voting libertarian, like, eventually we'll have the critical mass to where we won't be insignificant, but you just got to start somewhere. Hope for it.
So let's go back to the book.
Yeah.
Finish out.
Okay.
Seventh property.
Yep.
Immutability.
Mm-hmm.
Why did you feel the need to focus on that as a name? Because it's quite like a stake in the ground.
Yeah. It just kind of like came up. I was like writing, and so when I was initially thinking about like the monetary properties, like I was initially defining that, and I was saying like, so for anybody listening, it's like in my book, I kind of quantify the way to assess money, or not quantify, qualify. The way to assess money is there's like 6 defined monetary properties. You can provide somewhat quantitative, somewhat qualitative assessments for all these properties, and you can say that the good that is optimized across all these properties is the one that will ultimately emerge as the best form of money in an economy, assuming no constraints like violence from governments and things like that. But throughout time, I kind of identify this throughout history. We had this trade of trust for efficiency that existed between money and banks. And over time, we said, okay, well, these forms of money are more efficient, and we're going to evolve into not just precious metals, but into coins. We're going to trust a government to mint them for us. Then we're going to evolve into dollars, and we're going to trust banks to hold all this stuff for us and governments to print that for us. And then now we're at a point where we trust them to not even have reserves. And we had this trade of trust for efficiency. And that ultimately is starting to create this very strong level of economic decay. And it's obvious at this point that that is a trade-off that we probably have taken too far. And if we thought about money from not just the perspective of 6 properties, but if we had a 7th property in there of immutability, then if the money is immutable and nobody's in control of it and it can't be changed, then that framework would probably have made us we would have been slower to make a lot of these trade-offs that we made throughout history. So I kind of make that argument, like from a fundamental level, if we think of money today now that we've got a technology that actually is not only immutable, but it's better in terms of every other category for money, it's a true innovation in the strongest sense of the word. We can prioritize that as something that we should value as part of money now. And we can say, okay, we don't even need this trade-off anymore. We've literally just innovated that away. And with immutability, like when I was first thinking about what to call that property, I was defining it as like the decentralization of production, storage, and verification of money. Those are kind of like the 3 primary functions of how intermediaries can get involved. And it took me a while to really like think through it. And it was actually funny when I was like, I was thinking through what I should call it. At first I was just saying like, I'll call it like decentralization or something. And then I was on like Twitter one day and I saw some sort of comment of Eric Voorhees that like alluded that concept to being immutability. And I was like, yeah, that makes sense. And I kind of looked up immutability, and immutability, I define it, there's different ways you can define it. Like people with a developer background are like, that doesn't make sense. Like that means it doesn't change at all. And like from that perspective, and like when you're defining in that world, that's what it means. But immutability is also defined as like highly resistant to change as well. And that's kind of how I'm defining in the book, is something that's very highly resistant to change. So if it maintains that property, then I think it would be fundamental money. And I think if you look at history, history is a testament to how things can go really poorly if you don't have money that includes that property. We have the innovation now to where we don't have to give up any sort of efficiencies in order to have that. Well, almost. We still need to build out a thriving ecosystem on top of Bitcoin.
Do you think that's lacking?
Yeah. Yeah. I mean, when I talk to, it's just, if I, coming out of the traditional finance world, if I go to somebody and I say, yeah, you should get involved in Bitcoin, they're like, okay, well, where do I get it? I can't get it from anywhere. How do I pay people in it? What do I do? And the amount of hand-holding and education it requires to get people there, it's going to take quite a bit of time. But not only that, we need all of the, current financial products and services of our current system to be replicated in this new system. And we're very behind on that. We need full-scale insurance solutions. We need full-scale lending products, which is kind of like the first to emerge.
We have lending products.
Yeah, that's what I'm saying. It was like the first to emerge was lending, but like there's like if you get into like sophisticated forms of like institutional grade lending of like structured finance and things like that, like that's kind of just like an emergent thing that's happening in the industry right now. I think it's like we might have it, but at the level and the quality that people expect of our current traditional system in a lot of different forms, I don't think that we're there yet.
But is it like a chicken and egg problem?
A bit, yeah. I'm not saying that there's any sort of blame to be had here. What I'm saying is it's a new industry and it's growing and there's a lot of work to be done. And I think that people could spend time, actually building things that, look, a lot of these debates about altcoins and the stupid utilities that they provide that apparently some people want, that they don't want, those debates wouldn't even be occurring if Bitcoin had utility. It's like
more utility.
Yeah. Sorry. If it had that, those levels of utility that we're referring to with that, it's like, and I don't think that I don't think that that's the right way to go about doing it. It's like if you're gonna go. If you're going to go hit on a girl at a bar, you don't talk shit about other guys to her to get her to want you. You go and you display value to a girl.
Is that where I'm going wrong?
No, man, you got the ink. You're kind of a type.
Yeah.
Yeah.
An old type. I get what you're saying. My defense of this is the move slow, don't break things.
Exactly.
And we're all patient for this to happen. I would agree with you in the shitcoin world, whether it's Solana or Ethernet or any of that bullshit. They've built things quicker, but at what cost? How much money has been lost in rug pulls, hacks, smart contract failures, and essentially they're A/B testing shit for us, which is great.
Exactly. I make that point all the time. It's an outsourced R&D sector for the Bitcoin world. And they get to experiment and fail, and then Bitcoin can replicate things that are ultimately desirable out of that ecosystem over the long run. I definitely agree with that. And to be clear, I think that Bitcoin's the tortoise that wins the race approach is exactly the right approach. I'm trying to make a point for the other side and say maybe we spend less time raging about shit on Twitter, and maybe we spend more time actually building things so that you don't have to rage about shit on Twitter. I
agree with that point. Yeah. Have you been sucked into all-day arguments with a picture of a dog that has 22 followers?
I have. I haven't gotten in any dog arguments yet. I don't think. I kind of avoid arguments for the most part.
Good move.
If I have like a good quip, maybe I'll quip. But other than that, I don't really.
Is there any particular stuff that people give you shit for or challenge you on?
Not yet. But I don't have any followers.
How many followers you got?
Like 5,000.
Yeah, we need to work on that.
Yeah, I gotta get those numbers up, man.
We'll get those numbers up.
Yeah.
Dude, I fucking love this.
Fuck yeah, dude.
Really really enjoyed this conversation.
Me too.
Do you
Thanks for
feel
having
like
me.
there's anything we didn't cover?
Oh, one thing I was talking to Ben about, I had this thread
Yeah.
that kind of popped off on Twitter, and it was about how like the whole like Bitcoin is backed by digital energy argument.
The sailor thing.
Yeah.
Yeah.
And I kind of took the other side on that.
Okay.
No shade on Sailor. That dude's a badass. But I think that like, okay, this kind of goes back to some of the points I was making from earlier, but I think like a lot of people come at arguments within this industry from their perspective. They're a bit myopic, and like, that's cool. But so like Sailor's an engineer, and engineers hear this idea like Bitcoin is digital energy, and like, that makes perfect sense to me. And then I'm assuming people, because it's such a big narrative, people are outside of that. It also works for them too. So I'm not saying it's a faulty argument necessarily, or that it's not faulty, but like a beneficial argument, because people are rallying around that concept, and it makes sense to some people. But my thread, I was kind of discussing like, okay, so if the purpose of definitions is to provide distinctions in meaning, and if we want to do that is precisely in the best way that we can, that will ultimately, show in a succinct way what Bitcoin is, the value proposition of Bitcoin. And when we say something like, Bitcoin is backed by energy, it's like, okay, well, everything is backed by energy. Like that, it's just a broad category. It's not distinctly defined. That's not like, if you said that to me, I'd be like, you're in a cult. Like that doesn't make sense to me at all. That's just
so I think we discussed this, Danny. I think we were saying if like Bitcoin is digital energy, then the US dollar is paper energy.
Totally.
Yeah.
Right. Exactly. And like anything is backed. You can make that argument for basically anything. And that's the point I make in the thread is I'm like, okay, well, so number one, if you're going to make that argument, then be complete. So if you're going to say, so hold on, I'll start back here. So we're talking about money. So if we're talking about money, then the term backing has a very distinct meaning. Mm-hmm. Backing means redeemability. Yeah. And if you read economic history, that's how it's implied. And like somebody on Twitter one time was like, well, who are the powers that be that like, defined it as such? And I'm like, well, it's like asking who are the people that determine a house is a house? Like it's just something that emerged and people decided that that's what it is. And if you read a lot of economic literature, that's very obvious. But so I think that like if we're defining money, then we want to say, when we say backed, we need to be clear. Because if you talk to people who are like, have a background in monetary economics, people in finance, and you say it's backed by energy, it's like, well, that doesn't make any sense. I can't redeem it for energy. And so like this is kind of a value add for me coming out of the finance world, is I can say like, okay, well, that it makes a lot more sense to people, which is going to be, I think, a huge wave of people coming in this cycle are like big capital allocators. When you say like, okay, well, sound money isn't backed by anything. Sound money has inherent monetary properties. Now, those monetary properties are enabled by all these things. And it's not just energy, it's property rights, it's contracts, it's supply chains, it's resources, it's governments, it's people working. Like there's all these different things, and ultimately amounts to you're basically making the argument that some form of labor or some form of capital is enabling it to have sound monetary properties, and that's what makes it good money. So I think you're kind of you're diluting that framework a bit, and you're kind of not creating the proper distinctions in meaning with that narrative. Now, you might be able to sell every engineer out there with that narrative. I'm not saying it needs to get necessarily shut down, but like if this is getting pitched in a serious way is something to like major capital allocators, then I think making the argument that like sound money has monetary properties. It's fiat thinking to think that like our money needs to be backed by something. It was only when we had paper money emerge, and paper money was good across all the monetary properties and much more efficient than like gold, except for it wasn't scarce. So it needed to be backed by gold because gold was scarce. And as long as it was backed by gold, then we could have the benefits of gold scarcity and all the other good monetary properties that paper has. When we had the inventions of like double entry accounting and the printing press and, like the telegraph, that's when like paper was the perfect form of money. It was moving trade all across Europe very rapidly. And so that idea of money being backed emerged with paper money, and Bitcoin is something that no longer needs that. And when we have secondary forms of money, that are existing on top of Bitcoin, like a free banking system, or some sort of layer 2 solutions that have their own distinct type of money, whatever it is, that ultimately settles in Bitcoin, then we can use that idea that it's backed by Bitcoin. But I think that part of the narrative probably deserves to be sorted out at some point right now, and that would be good when you're talking to people in finance, at least.
Well, me and Danny discussed it, and we struggled with that concept of it being backed by energy. But at the same time, I do like the concept and the narrative of the Bitcoin network making energy systems more efficient.
Yep.
So just a slight deviation from that to explain, and Safety explained it to Jordan Peterson recently, and it was really good, really interesting that you can be in one part of the world, have an energy system that isn't being fully utilized. You can mine with that excess energy, create Bitcoin. You can move that Bitcoin around the world, and maybe in the other part of the world, you can buy more energy. But you have the ability to make the energy infrastructure or the grids more efficient.
Yep.
I think it's a great story for Bitcoin.
Totally.
It's totally relevant for Texas. I think the grid there is ERCOT. It's called ERCOT or something. There's a narrative there that Bitcoin mining is becoming really important for that system because its fragility was exposed. Was it a year ago?
Yep.
I think that's a great argument, a great discussion to have. But just saying backed by energy, I'm with you. I struggled with that.
Exactly. And I completely agree. The way that Bitcoin is going to revolutionize the energy industry and enable these technologies is absolutely massive. And I don't want to take away from that narrative. I just want to make the argument that is a very separate narrative from Bitcoin's function purely as just money and whether or not it's better money than other forms of money. These are separate. It's like Bitcoin isn't just a good store of value. It's also a permissionless payment technology. It's a new form of property rights. There's other dimensions outside of money that we can think about Bitcoin from. But when we're talking about it in the dimension of money, I think that we need to be like concise with that narrative.
Yeah, man.
Yeah.
Well, listen, you crushed this. I fucking loved it.
Hell yeah,
I'm telling
man.
you now.
Had a good time.
Great. Anyone listening, go and fucking buy Eric's book, Bitcoin, The Seventh Property. Go get it now. Go follow Eric on Twitter. We'll have it all in the show notes. Just tell people where to get the book, where to find you as well.
Yeah, it's on, you can get the book on Amazon. And you can find me on Twitter at Eric, ERICYAKES. That's my handle.
All right, man. Well, listen, thanks for coming on, dude. And stay in touch. If you've got a big thread and it's not getting the traction you want, just drop me a DM.
I'll tag Pete.
I'll ping you out. And we should do this again.
Absolutely. I'm in.
All right, man. Take care.
Later.